Imagine a future where rent reaches astronomical heights in America, and it becomes literally impossible to live in the country while keeping up with the expenditures on basic things like groceries and fuel. How would that make you feel? Well, that's exactly what happened to Japan, a phenomenon that the world calls an economic bubble burst. But the question is, can the US avoid falling into the same crisis? Before we get into all these details and imaginary scenarios, you're probably asking yourself, what on earth is a bubble? Well, in this context, this isn't the bubble you know of. Technically, the logic behind a physical bubble is applied here, because this is when assets like stocks, real estate, and whatnot are inflated way higher than they should be. Now, during this bubble, the demand for an asset increases rapidly, which means it'll cost much more. This asset doesn't have to be a valuable one, but just know the price will still be increased and eventually lead to a self-perpetuating cycle of buying. This is all because people think it's best to buy something before the prices rise, which it does because of constant purchasing. Wild, huh? Anyway, now that you're familiar with this term, let's talk about what Japan's bubble is and how it came about. In the 1980s, Japan's economy was in shambles and overheating to the core. In other words, the price of assets was so high it was about to make life miserable. These economic issues affected the country on an institutional and structural level too, changing the financial landscape for good. One of the factors that caused the bubble was the involvement of the Ministry of Finance. This department had complete power over financial decisions, and everyone expected them to do something that would help the country as a whole. Unfortunately, the Ministry of Finance made all the wrong choices. They favored personal relationships rather than what would be best for the economy. Banks were then super rich, but didn't have the proper staff to manage finances properly. These people relied on the MOF's guidance, which led to malpractice and overvaluation of assets in the country. In 1985, new policies were made about interest rates, shifting it to a more monetary way. Japanese banks were urged to engage in trade in the euro-dollar markets. As the stock prices went up, the banks issued more shares, increasing their total assets. This was pretty short-lived because in 1990, the stock market crashed. This made the overall banking system really vulnerable, especially when it came to maintaining capital. The burst in the stock market and bubble in Japan triggered one of the most difficult times in the country's history. In 1991, Japan faced a major recession, which was amplified because of the faulty banking system. So, just to recap, the bubble was because of the centralized institutional structure of the Ministry of Finance, the deregulation of interest rates in 1985, and a ton of borrowing practices in the international market, which all led to a very difficult time for Japan in 1991. So, what happened next? Before you find out, why don't you head on over and subscribe to the channel for more videos like this one. You won't regret a thing. Well, life in the 80s was pretty great over there because Japan was going through a major economic growth period, with real estate and stock markets in their favor. The GDP growth was higher than any other country, and the price of assets soared to new heights. The bubble burst had these assets plummeting to new lows, which eventually led to a lot of bankruptcy and financial distress. How were the common folk going to survive? The country became almost uninhabitable at this point. Today, Japan's economic challenges are completely different. This time, the population is the issue and birth rates are low. This is topped off by a shrinking workforce, which further poses demographic challenges like maintaining the GDP. They've even encouraged an increase in the female workforce so that they could get somewhere as far as innovation is concerned. But they're still pulling through, and the country's considered to be one of the most ideal places to relocate or spend your holidays. Hey, that's a pretty big glow-up. In fact, they even managed to avoid a recession. Their GDP showed a 0.4% growth in the October to December quarter, which was expected to be a 0.4% contraction. How did they do this? Well, companies spent a lot on plants and equipment, which was the reason the GDP grew in the first place. In each quarter, the GDP grew by 0.1%, with an initial reading of a 0.1% drop. Capital expenditure increased by 2% per quarter, while the government expected a 0.1% decrease. Okay, now's the time we start comparing all of this to what's going on in the US. The only thing that can equate to something as bad as Japan's infamous bubble is the Great Recession. From 2007 to mid-2009, America went through a severe financial crisis, housing market crash, and widespread unemployment and downsizing. The recession and bubble burst have the similarity of assets bubbling. Does that make sense? So, in the case of the US, it was a housing bubble along with loans, mortgages, and all that technical stuff about spending money that you were never taught in school. This housing bubble led to increased prices of homes, which was followed by an immediate rapid decline. In both Japan and the US, the financial sector was to blame. In America, financial institutions faced a ton of losses because they invested in risky mortgages that couldn't be paid off by people who had bad credit. When Lehman Brothers went bankrupt in 2008, all hell broke loose. You might know that this bank was very important because of how much financial assistance it provided to people and how many business deals it made with other banks around the world. They used the Lehman Brothers bankruptcy as an example and weren't prepared to borrow or loan money from others, making the economy 10 times worse. This collapse also made it difficult for businesses and consumers to access credit and get their hands on some money for investments and whatnot. This then declined consumer spending, investments, and, well, the economy. The U.S. issued the Troubled Asset Relief Program, which was designed to stabilize the financial system, along with the American Recovery and Reinvestment Act, which encouraged economic growth by spending on new infrastructure and tax cuts. Unemployment spiked to 10% in October 2009, and economic growth seemed to be non-existent. Years later, America is what you see today. There were brief periods in time when things were going well, but today, strategists expect a growing bubble in the U.S. economy. There's been a recent surge in stock prices. The S&P 500 reached the 5,000 mark for the first time, and to those who don't know what this means, it's bad news. Now, these surges have occurred in the past, but they're either at the end of a recession or at the beginning of a bubble. Major tech companies are at all-time highs, with a trailing 12-month price-to-earnings ratio of 45x. And yes, this is treading bubbled waters, and investors are advised to be careful when making their next move until the market is corrected. On the other hand, inflation is at 3.15%. People are struggling to make ends meet, and rent is at an all-time high. Do you want to know what Japan's inflation rate is? 2.20%. No wonder every student's out there learning the language and planning to study over there. The stock market is a jumbled mess. And yes, a bubble is possible. But America can use Japan's financial crisis as an example to move forward. The history is right there, and relations aren't as bad as they should be considering their next move. They can pass reforms and policies for stricter regulatory oversight to prevent major risk-taking behavior in the market. The government and other policymakers can focus on not relying on specific sectors or assets that are vulnerable to bubbles. In the end, this is what Japan's first mistake was with the Ministry of Finance. If the country wants to avoid another Great Recession, it needs to act fast, and learning from other countries is important to get the economy back up. The U.S. needs to focus on proactive economic policies that focus on structural issues like housing, consumer spending, and debt. You don't even want to know what the national debt stands at today. Enhancing corporate governance, investing in innovation, and promoting a better work-life balance is just the start of growth. Keep an eye out for certain assets, because if one of these blows, it's a bubble all over again. Now, if you like this video, please subscribe to the channel for more content like this. We're all about discussing the economy and the behind-the-scenes of the business world.